المشاركة معك ومشاهدتك.
sort of talking, you start to talk like this.
Think about think about an opera scene. Legitimately, they about a fist away from your face, because it's directional. So
Yeah,
so
okay,
it's
so
literally just point at like a beer or whatever.
don't hold it down there. Yeah.
What? If you want to be an MC, it's alright.
Oh, welcome into the stage.
Vertical events acknowledge the traditional custodians of the lands and waters of the Gold Coast, the Yugambeh people, and pay our respects to their elders past, present and emerging.
Good morning, ladies and gentlemen, and welcome to the Gold Coast Investment Showcase. It's so great to be back here. Our team absolutely loves this conference, this location, the hotel, and so good to see so many familiar faces. And I guess a number of our familiar investors that are here today would have noticed that the team is not complete. Yes, we're missing the boss. And it's good to see that we actually all made it here on time, given that Stewie's not here. But I'm sure that he has tapped into the live streaming very early in Perth over there at 6:30 this morning, but no doubt that he's there. So big shout out to Stewie. Everything's going well. He just wanted me to pass a message on to you all that he is the major shareholder of TG Metals, so I'd appreciate if you were all in the room during their presentation in the next session. So looking forward to what will be 40 companies presenting over the next couple of days, and we've had a really good investor interest, almost pushing 500, so I imagine over the next 2 days people will be coming in and out of the conference. And when Stewie and myself sat down to put this conference together, the viewpoint was to allow an event where you've got mostly retirees that are coming to hear from junior mid-cap resources companies and energy companies. And it's kind of like the perfect situation for all here. You know, I'm no finance expert and I don't have any qualifications that allows me to make any forward-looking statements, but the fact of the matters are that if you look at the ASX 200 or the All Ords, it's performing pretty well. Wesfarmers' share price has gone nuts. The bank's share prices, who would have thought that CBA would get to $127? Charm and I, we bought our kids a parcel of shares when they were born, and we bought our eldest one, who's 16 now, we bought her some CBA shares when she was born, and they were $49, and we did the dividend reinvestment. And you look back and you go, geez, why didn't we just invest that ourselves? Why did we do it for our 16-year-old? So you've got this situation where ASX 200's flying, all the super funds are having very healthy returns, and at the same time, the junior resources market is just taking a little breather. We experienced a really good momentum and investment support in 2022 and 23, and I reckon it's just having a little break. But you ask yourself this question: do you think that's it with the electric cars? No, I don't think so. If you step outside of this country and go to other parts of the world, it's booming, the electric car business. So I think this is a great opportunity for all to hear from the companies involved in the EV sector, and we've got plenty of them. And not to mention the gold companies and precious metals, because gold is absolutely flying, and with some of the uncertainties happening across the world in other countries, it's a pretty solid position that gold's in at the moment. So a lot for you all to enjoy over the next couple of days. A conference like this wouldn't exist if we didn't have the great sponsors, and we're very pleased to have Wilson's back at the Gold Coast Investment Showcase as our major sponsor. Both Craig and Rob, we really appreciate their support. Craig will be part of the panel just shortly, and then later on, hopefully all of you guys will be able to have a great day, and when the day's over, there'll be some drinks served around the exhibition area, and we'd like to thank Wilson's for their support and putting on those drinks. And then as our other sponsors, the Lynn Partners, those of you who are regular Vertical Events or ROU attendees, you would know that the Lynn Partners are amazing supporters of us since 2013. They're the best sponsor you could have. They're based in America and they just want to be part of our events with their branding exposure. So we look forward to Jeff and his team coming back out to Australia sometime soon. And we're really pleased to bring on a new sponsor, Alliance Nickel. Paul's in the crowd. Alliance Nickel will be sponsoring the live streaming. So all those that are viewing us from outside of the Gold Coast, you'll be looking forward to seeing the video production about Alliance Nickel, and Paul will be presenting later today. And there's all our supporters. Love Ricky from Shares and Value and East Coast Research, great supporter. Rob Murdoch, he'll be here tomorrow morning talking about the market, but I think he's arriving at some stage today, so we'll definitely hear him when he walks into the building. And then there's our media partners. Big shout out to the team from Spoke. Josh will be on the stage very shortly running the panel. They've been tremendous. They're a PR media firm based in Perth that done a lot of work with us of late, so we really appreciate their support. Definitely mining.com.au as well, thanks to Chris and his team for the promotion. Always Dave Tasker at Chapter 1 and Wally Graham at the Resources Roadhouse. And now I know that you guys are itching at Christina Morrissey, so I'll hand it over to her and enjoy the next couple of days.
I will keep it brief as you go. Can you all hear me okay? Yes? Wait, maybe I should push the wrong button. How's that? Now can you hear me okay? Is that better? If you're one of my kids, you'd have said, just keep the switch off, please, Christina, that would be better. It's really lovely to see you all in the room again and to see some new faces as well amongst you. I'm sure I'll get around to have a chat. But what I was saying was I need to be relatively brief because we're starting off this morning with something a little bit different. And Jackson has mentioned that we've got some fabulous experts that come along. Obviously, we want to give you investment opportunities. We also want to give you knowledge and build your knowledge so you can make really great decisions, so you can spend your money wisely and flit off into the sunshine. That would be fantastic. So this morning we're doing a panel to open up. So I'm going to call my esteemed panellists up to the stage one by one, and behind me you shall see pictures of their faces. And I would like them, please, to sit in front of their picture in the chair, please. So who's coming up first? We've got Craig Brown, who of course is at the end. And Craig, Jackson mentioned him, is the head of natural resources for Wilson's, and perhaps the slowest moving of the panel this morning. Come now, Craig. We fed him pizza last night, so that was our own fault, wasn't it? Welcome, sir. All right, and we've got a microphone on each chair for everyone as well. Catherine Cutler, come on up here, Catherine. So we've got our financial expert, and here we have our exploring expert. So Catherine loves nothing more than going out and finding big fat deposits, which she can translate into something for our next expert, who is our producer, our producing expert. So if you please welcome up Andrew Corbett. Hello, Andrew. The shy and retiring Andrew Corbett, who will be drawn out of his shell and sharing information with you by this gentleman here, Josh Nyman, who we also had mentioned with Jackson. And Josh is the man in charge of Spoke, and he today is our expert wrangler. So we've got 20 minutes for this panel, and as usual for all of our new presenters in the room, what I'll usually do is I'll give you a bell at 2 minutes and I'll stand up at 1 minute, and if I'm on the stage at that point, you've got troubles. But would you please welcome our panel, Josh? And look, this is a great way to get us informed for this next 2 days. Will you please put your hands together, everyone?
Thanks, Chrissy. Good morning, everyone. Great to see you all here. And good morning to my panellists. Great to have you up here on the stage. And thanks for the introductions. Look, I'll jump straight into it. Craig, we've had a pretty interesting year in terms of the price spike with gold and copper. How do you see that translating to, I guess, capital market investment in those commodities?
Yeah, thanks, Josh. Well, it's been a very interesting market for the first 6 months of this year. There's been over $5 billion of capital raised in natural resource companies, and out of that $5 billion, probably about 60% of it has gone into capital raisings in gold and copper specifically.
That is a fair percentage. Is there a particular breakdown between gold and copper? Is there a favourite?
Yeah, the split is about 50-50 in terms of those capital raisings. So what we've seen large producers raise capital. We've seen a lot of M&A activity as well, and we've seen it all the way down to the junior end as well, with Kingston Resources raised some capital early this year to fund their open pit project. And there's a lot of opportunity, I guess, in the market, with the prices being 30% up since the start of the year.
Great. My next question's to the Explorer, Kath. So is this level of investment giving you confidence that you'll see some of either the current or next wave of investment as a junior exploration company?
Yes, well, I hope so. It's been a reasonably slow start to 2024 for juniors. Not a huge amount of investment, specifically gold, copper, right at the tail end of the market. But with this increase in the current gold, or the high gold Aussie gold price, and the rising copper price, I think we're seeing the majors consider their positions, and specifically their inventories and their strategies for gold moving forward. I think investment is probably not high for retail at the moment, but what we're going to see is some industry coming in, with those majors investing in junior companies with really good exploration projects. Killy's a really good example of that. We've just completed a $13 million deal with Goldfields, which is great for us. It's on a WA project, gold project up in the Tanami. They not only have completed that joint venture earn-in staged agreement, they've also put $500,000 into the company as well, which is really great, because that means they're then leveraged to another gold discovery at our 2 projects in Queensland. So I think we might see a bit more of that style of investment in the next 6 to 12 months, which is really great for juniors.
Certainly nice to have a bit of extra cash in the bank.
Always.
As Craig alluded to, Andrew, you guys recently underwent a cap raise to the tune of $4.6 million. How did you gauge that capital raising experience compared to others in recent history for the company?
Yeah, there's definitely better sentiment and interest in the cap raising. So we actually did 13 and a half, so 8 million in a placement, and then 4.6 for shareholders in a rights issue. And the uptake in the rights issue from shareholders was a 100% increase on our last time. So that's a really good sign. But the whole placement, we did it at 6.5 cents, and we're trading nearly 8 cents now, and we haven't really traded below 7 cents. So for the first time, for a long time, we're trading above a capital raise price. So there's a really good positive sign, I think, for where we're at in the cycle, and things feel like they're starting to bottom. There's a bit more interest.
Yeah. Thanks, Andrew. And I guess at this point in time, we spoke a couple of weeks ago, and you mentioned that there had been some, I guess, operating constraints, your mine being in New South Wales, particularly coming off the back of COVID. Can you elaborate a little bit on what some of those constraints were and how they may have eased in recent times?
Yeah, absolutely. So we purchased the Mineral Hill mine in early 22, so started looking at it in mid 21. So we've got sort of 3 years of cost data. Reagents over 3 years are between 30 and 50% higher. That's a huge cost increase that the industry has to absorb, because we're price takers on gold and copper, obviously. So that has settled down. Those reagents aren't dropping in price, but they've stopped going up. We have over 100 people now in the company. Wages in 22, 23 were 7 to 8% increases, maybe even a bit more, depending on the key positions. Then the following year, sort of 3%. Currently, it's feeling like it's 2.5%, 3% wage increases that are going to go through the sector this year. So again, still going up, but stopped increasing in terms of momentum or growth. So, and equipment, you can actually get a bit of equipment now. So there's some examples of what has settled down. The prices of equipment are still very high, but it's settled down. We're owner mining, we don't use contractors, but when we have got contract pricing, they were exorbitant in the last 2 or 3 years. They've definitely changed now. They are now starting to sharpen their pencil, the contractors. So there's some examples. It's not coming down. Our costs are not going to drop, I don't think, as a sector, for gold and copper producers, but at least they'll stop going up. So margins should expand with these move in metal prices. Excellent. Certainly some positive movement there. Now, Kath,
your company's in an interesting position because you've got 2 projects here in Queensland and 2 projects back in Western Australia. What are some of the key, I guess, operational differences you see between the 2 jurisdictions?
Well, I concur with what Andrew just said about some of the exorbitant costs in the last couple of years. WA had some really extreme limits met, 2022, 2023. At some points, contractors were charging or tendering 2 to 3 times what a normal survey, assay, drilling costs, anything to do with exploration was really extreme and unachievable for a lot of juniors. So costs is a real difference between WA and Queensland. WA had the extremes and Queensland really saw it just a sort of market increase, which was not exorbitant. The other difference I have noticed operating in WA is access and approvals, government approvals in WA has become more taxing than it is in Queensland. Queensland's processes are actually quite standardised and quite easy to navigate. They can be laborious in some parts, but generally are quite fast-paced to get on the ground and complete exploration. So they're the 2 main differences I can see to date, and that's sort of the last 24 months. 24 months of operating.
Okay, so Queensland open for business. Come and explore in Queensland.
It's definitely my preference.
I just want to turn the conversation to copper briefly. My next question's for Craig. Look, it's pretty widely known that demand for copper is going to outstrip supply based on current global mining operations. What do you think needs to happen to get more of the red metal into the marketplace?
Well, right now, last year, the tonnes for copper production across the market was about 22 million tonnes. And that growth rate is expected to project to 36 million tonnes in the next 7 years. So the average growth rate for that market is going to be about 9% per annum for the next 7 years. How is that going to happen? Well, existing production from existing mines, I think what we're seeing is a lot of the majors are merging rather than exploring. So they're finding assets that are a lot further advanced down the chain. From discovery to production usually takes a lot of time. So a lot of companies are starting to look at acquisitions within that market just to see, where production can improve and also boost production. But what we're also seeing is out of the forecast production over that period, there's still going to be a 20% gap between demand and actually what is getting produced out of the ground. So that other 20%, there is going to have to be a lot more exploration activity occur across the market, and similar to what you guys are doing in Queensland, I guess.
Thanks, Craig. So, and the next question is for you, Andrew. As a producer, do you think there's going to be greater acceptance of lower grade copper material to help fill that 20% gap that Craig alluded to?
Absolutely, there has to be. I mean, gold and copper grades over the last decades, 20 years, whatever you look at, have all been falling. So reserve grades are all falling. And that's why costs per ounce or cost per pound of copper have been climbing. But the big low-grade copper ore bodies are a massive opportunity, but I think people need to remember we actually need an incentive price in copper to get these built, because the current copper price is great at $4.30 or $4.50 US a pound, but I don't think, based on current capex and opex, that is enough to get these low-grade projects built. We saw it in lithium, we've seen it in iron ore, we've seen it in nickel, we see it in every commodity. At some point in the cycle, we will get a move in the copper price that'll bring these projects into production. We haven't experienced it yet. $4.50 copper is not going to bring a lot of these low-grade projects online. So that's really good for us because we've got a producing mine which is going to be producing copper soon. But to get those new ones online and get a return from investors, we need a high price. All the copper M&A is just meaning the major copper producers get more exposure to copper. They're not actually bringing any new copper tonnes to market at the moment, and that's a real concern. But it's good for the copper price. It's going to go up.
And so does Kingston see the M&A activity as a threat or an opportunity?
Massive opportunity.
Kath, obviously you're looking for copper here in Queensland. Does that real, global demand and the need for copper in the future to help the world transition to a greener future, is that what drives you as an explorer or an exploration company?
Yeah, absolutely. The EV market and what it is it's going to be our future, and whatever battery we end up going with, regardless of what style, it's all going to need copper. So that's what's driving us in our projects currently in Queensland.
Thank you. And I just want to talk about the precious metal briefly. Craig, demand for gold's been increasing, particularly from central banks. I think there was a survey put out by the World Gold Council yesterday that the central banks see that 29% of central banks believe that they're going to increase their gold reserves over the next 12 months. And I think we've also seen demand go back up for gold for jewellery, particularly coming out of China and India. So prices have been strong year to date. Where do you think they're going to go from here?
Look, I think, 30% increase in gold price over the first sort of 6 months of this year, I think that's actually been a reflection of something that's been necessary. Obviously, we've seen costs and inflation increase over the last 2 years, and the gold price didn't move. So what we're seeing now is obviously, the gold price reacting to stuff that's happened historically. And I think longer term, demand is there. Reserve bases are growing for many countries. China's obviously a big driver of that market as well in terms of purchasing gold. I think silver also will play into that, because sometimes if gold is too high in terms of value, people look for alternatives, and silver might be another growth opportunity. And we've seen silver price up 30% in the first 6 months of this year as well. So that's actually starting to outperform.
Absolutely. And do you think some of those junior gold exploration companies might be subject to some of that M&A attention, as a la the copper industry?
Yeah, absolutely. I think we look at those markets and those opportunities all the time, but there is plenty of good stories out there with projects that are real, projects that are mining licence, projects that are near-term producing, and have the opportunity to sort of leverage that into a bigger play. So I think there's exciting opportunities ahead, especially in the Cobar Basin.
I'll open up this last question to all of our panellists. So for investors seeking, reward from either the red or the precious metal, being gold, what should they be looking for in companies that will give them the investment edge? Start with you, Craig.
High quality management and a good deposit.
Couldn't agree more. Technical team that has strong management, really good projects, and a really strong focus to move their share price forward.
Yeah, it's a similar theme. I think having an approved project, having a team of people that can deliver it is the key right now. As Kath alluded to, approvals are very hard no matter where you are. Like getting a cyanide licence in New South Wales is almost impossible. And that's the sort of thing you need to look for and keep in mind when you're looking at people talking about projects and assets. Getting those key approvals takes a lot longer, and getting those key people to deliver it. I can't do anything at Kingston without my team. So they're the number one.
Putting the people first. That's all from us. I'd like to thank the panellists for sharing your perspectives and insights. Much appreciated. For those in the audience, you can catch Andrew from Kingston later in this session at 10:15 presenting. Cass presenting tomorrow at 10:45 in the morning session. And I'm sure Craig will be floating around for the duration of the conference with his team, Wilson. So thanks again for the opportunity, Vertical Events. Thank you for hosting. And we'll hand over to the first presenter of the session.
Josh, thank you so much. I was going to ask, did anyone have a spare question? Because he's such a good expert wrangler that he's given us an extra 3 minutes. Did anyone have a question that they wanted to put to the panel while you've got them all here in front of us? No? Let me save it. I can run around in my high heels. I don't have an issue running around. finger point. Right, down the back. Good. Hang on, I need to find my 30. Introduce yourself to everyone, Craig, and then ask your questions.
My name is Craig Ruglis. I'm a consultant. Craig, I'm just interested in PGEs as a potential, not replacement for gold, but as a competition for gold going forward in terms of just investment in the PGEs, platinum, for instance.
Yeah, sure. I agree. PGEs is also an area where they could outperform. I think they're harder to find. There's a lot of production coming out of South Africa for PGEs. Will we see a project in Australia get up? I mean, I think Chalice has been challenging in terms of the opportunity. It's obviously a very large deposit, but near term, I think a lot of that production is still going to come out of South Africa.
What's a PGE?
Platinum group elements.
Okay, team, we'll leave it there. Thank you so much. Put your hands together for our panel, everyone. No, just right. Actually, Craig, could you take that little table there with you? You look like a strong human being. So I've got a couple of things that I need to do. One is pop that down there. Two, I'm taking this with me, so I've got a few things that I need to remember. So, team, when my presenters come up, and the first one is very well trained, I know that because I've spoken with him myself, I'll ring my bell at 2 minutes, and then I'll stand up at 1 minute, and then I'll stand uncomfortably close to you if you're up on the stage to get you off. We're going to continue on this conversation about copper, and I think it's really interesting that copper, which was integral to early man and prehistoric times, is still really integral and really important for us in this day and age, especially in our energy transition. So our first investment opportunity for you at the Gold Coast Investment Conference comes from Coda Minerals. And this fellow here, who's very focused on what he's doing, is an absolute delight. His name is Christopher Stevens, and he's the CEO of Coda Minerals. He's also a multi-talented human being in his own right. He's an international martial arts expert, jazz musician, massive brain, host of his own podcast called The Codcast, which has nothing to do with fish, I'm led to believe, so you'll have to listen to that one yourself later. But he's here today to tell you the story of Coda and to invite you to come along and be part of the journey. Would you please make him welcome?
Thank you very much, Chrissy, and thank you to everyone for having me here, and also thank you to being here. Now, I'm very conscious there's a certain responsibility of being the first speaker up. So over the next couple of days, you've got about 40 companies. Every single one of them will have a project which is open along strike and down dip, but also some really interesting stories coming up. So I feel if I do my task well today on stage, what I'll do is leave you with some ideas around what makes a good exploration company, what a good investment is, and also the flavour of the team. I think it was really interesting from the panel earlier talking about people make everything. So one of the things I find with these conferences, again, is that the CEO stands on stage and gives a speech and tries to get as much information as humanly possible about the project over to you in 15 minutes. And again, I'm very conscious that the perception of the length of a minute depends entirely on which side of the exploration company speech you are giving it or listening to it. So some of these can be quite dry. What I'd like to do is get you to maybe be interested enough to come back and see all of the media work that we do. So a while ago, we took the view that we wanted to be the most transparent, open project out there, the most transparent, open company. So if you go to codaminerals.com, you'll see the usual ASX information, but you'll also see interviews with the team. I think every member of our team has now been on our Codcast, Coda Minerals podcast. It sounds rather silly, but it's actually getting a lot of traction because you can go away from these kind of presentations and actually see who's behind this. One of the themes that often we see at conferences is that the easy projects are, for the most part, no longer. It's getting harder, and especially in copper. And what makes an easy project? Well, in many ways, we've had a reasonably blessed life at Elizabeth Creek. We're just 6 hours from Adelaide by road. We're surrounded on all sides by some of the world's great exploration and mining companies, BHP, pretty much on all sides of us, FMG Wailua's exploring, IGO, First Quantum Minerals. So it's a very active area. We've had this tenure, I've been personally involved in this tenure now since 2015, and Coda has been listed for 4 years. For a company listed 4 years, we've kept things pretty tight, just 175 million shares on issue. Our board is very experienced. Keith Jones is the former chair of Deloitte Australia. He's put well over $1 million of money into this company at arm's length on market terms. He's very involved. Robin and Paul have developed 17 gold and base metals projects over their careers. 17. And so the experience and oversight. I talked about the easy projects being gone, and for the most part they are, but great location, a good board, relatively tight structure is all going for Elizabeth Creek. But what you want to see behind these companies is a team that is capable of addressing challenges and addressing the many difficulties of running an exploration company in the modern world. Now, this slide came about after listening to the Money of Mine podcast, the second best exploration podcast out there after the Codcast, of course. It does have a few more views. But this was with a chap called Ahmed Salim, who's a really interesting sort of observer of exploration companies. And they talked about what makes a great explorer and what makes a good company and a good team. And I thought, well, you know, I'll sit down and I'll write out what he says and I'll see how we measure up. So this slide came about. We have a quality asset, over 1 million tons of contained copper. In that same episode, they were talking about a copper company with 500,000 tons, and they said, well, that's nothing to be sniffed at, that's real scale. So we have over 1 million tons contained copper equivalent, over 800,000 tons of that's primary copper. It's advanced, 92% of that is in the JORC indicated category. That means we can publish net present values. That means we've got a much greater understanding of our geological risks. It's in South Australia. Just heard about Queensland being a good place to operate, and we have a project here too. I'm a proud West Australian, despite the weird Pommy accent, but South Australia is the best. I've operated in many jurisdictions around the world, including overseas, and South Australia is just wonderful. In terms of the team, what have we done? Well, as I said, we listed in 2019. We listed with just 75% interest in 250,000 tons of contained copper. That is not enough. That is not enough for a project. You will never get scale with that, except in very rare circumstances. So we got to exploring, and we got to corporate activity. We took over the junior partner. We now own 100% of the tenure. We quadrupled the size of the resource. Not only did we quadruple the size of the resource, but the additional 750,000 tons are now our flagship. It's the best stuff on the tenure. We've demonstrated viable mining and processing pathways. The mining wasn't easy until we found the right people. The processing is still a challenge, but has been advancing very, very well. We have exceptional processing pathways, and we put out an announcement yesterday talking about a material increase in our recoveries from Windabout, which we expect to increase right across that. And again, quick plug for the podcast, episode 7, this little 6-minute explainer. Do you know what a float cell looks like? Watch the video. Do you know what the, all of the information behind this is? What our hopes and dreams for the next 3 months of work are? Again, all in there, so I refer you to that. The project's got some real advantages. $826 million NPV, 31% IRR. That is improving. It is a mistake to believe a scoping study is the best a project can be. It should be the foundation to grow from, and it has been for us. We've increased the value of this project by 45% over the last year through hard yards work and the application of science, and we haven't changed the underlying assumptions. We're still using $8,800 per tonne copper. The cobalt is highly strategic. It accounts for about 25 to 30% of our revenue in our model, and it gives us access to battery minerals incentives, critical minerals incentives that other copper projects don't qualify for. Now, I've said this many times, never trust an explorer that stands on stage and talks about the commodity market for a third or more of their presentation, so I'm going to give you 30 seconds on this. Everything in mineral economics comes down to elasticities of supply and demand, especially supply. We just heard that copper's set to grow to 36 million tons. It's pretty much the biggest mineral commodity out there. 20 million tons, 22 million tons per annum, roughly $8,000 to $10,000 a ton. It's a couple of $100 billion US market. Most of that copper is just supplied by a handful of companies, roughly 90% from 12 companies, I understand. The next stages of supply have to come from the smaller companies, and the companies that will do well, and we've seen this time and time again, we've seen it in iron ore, we've seen it in lithium, they will be the ones that have technical, viable processing pathways and are able to get there when the commodity starts spiking, not 5 or 10 years after it starts spiking. And I believe Coda fits very well into that. Now, for the next 3 or 4 minutes, I'm just going to fly you through the assets so you get a bit of an understanding of who we are. So as I said, South Australia, 6 hours north of Adelaide. We have about 740 square kilometres of prime exploration tenure, sandwiched between some majors. MG14, open pit, first deposit in our model, first deposit in our mining plan. 1.42% primary copper in an open pit, just 20 metres below soft dig dune sand. There's the dune sand, that's the BHP haul road across our tenure. We have a contractual right to use that when in production. Windabout, our worst deposit, still over 1% primary copper in an open pit. In this case, currently optimised to 4 open pits. As we re-optimise at higher copper prices as our forecast, we would expect that to grow significantly as the pits start to join up. Some exciting new exploration. We just got hold of this tenure just to the south, you can see in the yellow line. There are some interesting targets there that look a lot like more MG14s. Obviously, when your main bulk of your mineralisation is underground, open pits help enormously with your model. So watch this space for some exciting exploration. Emmy Bluff, the 11th largest primary copper deposit in Australia, according to an Oz Minerals presentation they put out during their defence period with BHP, but it's material, it's large. It sits below some of the most ideally suited mining ground, frankly, in the world. Single-use ground, very, very ESG friendly. 40 million tonnes in the resource at 1.9% copper equivalent. Now, I unashamedly use the copper equivalent, which sometimes can be a bit of a dodge in exploration world, but the cobalt is Carolite. It floats over 90% in the current base case. It recovers over 95% in final circuit. This is beautiful, pure copper cobalt sulfide. The mine plan took a bit of work, I'll be honest. Happy to talk about it, and there's a lot of media on our website about this, but ultimately now well established and well understood using Mining Plus, the world's foremost experts on this style of mineralisation. These deposits are quite unusual in Australia, and there is no doubt it's been a little bit of a headwind for us. But they are very common, extremely common across the DRC and Zambia, very common in Central Europe, and once we got the right people on the job, life became a lot better and a lot easier. These are the numbers as they currently sit. Expect them to increase. We're working on recoveries. As I say, we put out an announcement yesterday with an 11.6% increase in the rougher float. We're now going to spend the next 2 to 3 months really translating that across the project. Increased recoveries are great because you don't have to mine any more resources. It's like finding more copper without having to mine it. So it's a very worthwhile pursuit. But talking of finding more copper, we have some really exciting exploration targets. Now I'm going to quickly just show you a couple of things on here. The deposit is cut off by an arbitrary tenement boundary to the north, so there is expansion to the north, potentially subject to various things. But within the existing tenure, within what we have, you can see here these Emmy East and Mirror targets. This is where it gets really exciting. The 2D seismic that we shot a while ago shows very clearly the resource boundaries. It picks it 1-for-1 against the drilling. What we've now seen, due to some additional work, is this wonderful reflector that you can see coming across here, just right across here out to the east. That's continuing, that's showing really strong targets. We've just done significant amounts of work on this, and we're really looking to drill this very soon. Yeah, you've got a $826 million MPV, you've got a 31% IRR. Why bother with exploration? Well, at 3 million tonnes per annum going into the mill, we only have an 11-year mine life. So again, an extension to that mine life of 4 or 5 years would be really material. You're not increasing CapEx materially, you're not making significant changes to the project, you're just increasing it at that point where you're still not getting NPV to nothing. So I'm jumping ahead too far. Now, one of the reasons that our share price curve does look a bit like Mount Everest is 3 years ago, almost exactly to the day, we hit an IOCG in the basement. This area is very well known for IOCG mineralisation. That's an iron oxide copper gold, which is distinct to the stuff you can see in yellow and red above it, which is a sedimentary Zambian style mineralisation. No one has ever explained to me truly why this exists in the way it does. There are effectively 2 deposits sitting on top of each other, almost certainly structurally related. Definitely not from the same event. They're about 1 billion years apart in age. So weirdly, we hit this. We got drilling, we raised some money. It was the most scary, exciting, stressful time pretty much of my life. And we spent a year exploring. We drilled 21 holes, 19 of which were mineralised. We got some incredible intercepts down here. There's about 70 metres at about a couple of percent. There's decent 10, 15, 20 metrages over 3 and 4%. That's multiples, talking 4 or 5 times the average mine grade of an IOCG. Unfortunately, what we couldn't do before we had to stop drilling and sort of refocus on the sedimentary was demonstrate what was happening right across this 2.5 kilometre boundary. So just to explain this, you've got 21 holes here with grades well above IOCG grades. You've got I had 2 and 4 up the top here, which again are 60, 70 plus metres over the average mine grade of these deposits. And you've got nothing in the middle. What's down there? I'd love to find out, and that's part of the plan. We are going to need a partner. Right now we're focusing, so just to quickly in the last minute talk about the strategy. We focused on the sedimentary. That's the right thing to do. This is a good, solid, mid-tier project with a very solid technical foundation to it. We've been improving it, maximising the current potential. We're now looking to take those recoveries further. We've had a few wins on the mining. We're going to have some wins on the recoveries. We had one yesterday and we announced. We're going to expand the resources. That's the next focus, whilst we also continue to search for the right partner to take the IOCG forwards. So if you're buying Coda now, you're getting a company that's kind of priced as an explorer because of that discount we had from the IOCG. But you're getting a project with a technical and viable go-forward case, really solid scale, a plus 30% pre-tax IRR, a team that cares very deeply and works very hard. And if you want to find more about that, please go to codaminerals.com, look for the updates page, watch the podcasts or the codcasts, and get to know the team and understand how we problem solve, because the easy deposits are all gone. So you've got to rely on the right team to take the more challenging ones forward. So with that, I wish you a very good conference, and thank you very much.
Thank you, Chris. Chris, I began my morning today listening to the second best podcast, sadly. I was walking up and down the beach listening to many of the boys. They were talking, was it Contender versus Pretender, talking about copper. And then I moved from that one across to the Bloomberg one, which is obviously the third best one. And Jeff Curry, was talking about copper and the cycle and agreeing with everything that you said. So you're very well aligned. And his big point was, these next discoveries to make this growing demand have to come from companies like yourself.
I believe so. Thanks.
Thank you so much. Will you please put your hands together for Chris? Now, for those of you who've just joined, I've said most of you found yourself a seat anywhere. I was going to say, come down the front, please, and make yourself comfortable. Plenty of room down here. All right. Now, talking about those smaller companies making discoveries, like Coda Minerals, it also extends to our next company. So we're talking Q Mines, which of course is a Queensland-based copper and gold developer that is rapidly transitioning down the development path. Their executive chairman is this fellow here, young Andrew Spark. Now, guess what Andrew did yesterday for fun? So desperate to be here that he actually drove 9 hours from his home base, because while he would like to buy himself a little place here in Queensland, where his big fat project is, he is yet to have an abode here. So he's living in Sydney, so he drove 9 hours. So I think that in itself deserves a big round of applause. So let's listen in.
Well, look, I'll be honest, I needed to spend 9 hours just to lick a few wounds after you guys beat us in the State of Origin the other day. So, no, look, it's really nice to be back. We are a homegrown, we're a Queensland-based company. We've got Queensland assets, so it's fantastic being up here. I'm pretty much the only one in the team that's down in the eastern states. We've got a fantastic team up here. We've got a lot of shareholders in Queensland, and it's really nice to be back here today to catch up with many of them. So. Okay, so Q Mines. So we're a 3-year-old company now. We hit the big 3-0 only a couple of weeks ago. So we listed in May of 21. And one thing I want you to take away from this presentation today is that we are a young and dynamic team, and we like to move. Okay, we hate watching the grass grow. Many of you have heard me say it many times before. And the other thing is we do things differently. Okay, so you'll see this flavour throughout the presentation. We own our own drill rigs, we've bought all the land, and we've come from, we've got a lot of expertise in the capital markets, so we think deeply about our strategy and how we can really monetize these assets, for our shareholders. So you'll see also that a lot of our board are big shareholders in the business, and we've invested a lot of our own money in the business. So this is something we believe in and something that we're really excited about, and I'll take you through in a bit more detail now. So as you'll see through the presentation, I'd like to keep this very simple because, as we talked about before, there's a lot of detail to get through today. So visualise. So let's start with the growth strategy. Okay, so as I said, we're in Queensland, and one thing that's very different about Q Mines, and don't underestimate this, is we're right near the coast. Okay, we're not 500 k's from the nearest pub. We're not, we don't have to travel on plane and boat and scooter to get there. We're literally 20 k's out of the regional town of Rockhampton, so we're in a fantastic location. And I suppose the key message there is that this gives us a really low capex advantage when we take this down that development curve. The other thing to take away here is that this asset is a former producing mine and a very high grade one at that. Okay. It was an open pit project. For those of you who are technical, it's what we call a VHMS deposit. These deposits are known for being, high grade, and historically it was mined at about 3.6% copper. 2% copper and 3.6 grams gold and about 19 grams silver. So these deposits, when you find them, they're absolutely gorgeous and they generate a lot of money for shareholders. Now we've got two projects here. If you have a look closely at the map, on the coast side, on the eastern side, you'll see our flagship project, Mount Chalmers. It's 100% owned, and effectively that's where our historic mine is, the Mount Chalmers historic copper and gold mine is. We have 4 deposits at that project that are already known. Okay, and I'll get into some of that detail in a second. And then on the left-hand side, you'll see we've got our recently acquired Devlin Creek project. We've acquired an initial 51% and we're moving to 100% interest in August this year with a further payment to another listed company. Now, you can see here this is a regional strategy. Okay, we're not, we don't have assets in Africa and some in New Zealand and some, all over the world. We really like to focus, okay, and that's a big part of our strategy here. We think that allows us to really allocate capital a lot more efficiently and really drive better returns for our shareholders. So we've got a team that lives up on site. As I said, we do things differently. We've bought a lot of the land over the mine site there, and that really allows us to really fast track this business plan. We don't need to get into long and protracted conversations with landowners about how we can get in and explore and those sort of things. All right, so the last takeaway here is that there is infrastructure in spades, okay, and I mean it. We're, as I say, we're so lucky. Gladstone, the 4th largest port in the world by metals throughput, is just to our south, about 60 k's by rail. We've got large gauge rail all the way traversing right across the project through Rockhampton down to Gladstone. 8 flights in and out of Rockhampton a day. Both Qantas and Virgin come in, so that makes it really easy for us to operate in a low capital environment, which is fantastic. All right, so the other thing here that you'll see that is different, and one thing that Chris mentioned before is a lot of the good projects have already been mined. Well, this is the one that hasn't, and I encourage you to look really closely at this because it's got some really different rudiments here that make it very attractive, for shareholders. Okay, the first one is if you look at those sections closely, it's shallow. Okay, we're not talking 500 or 600 metres down. We're not talking underground mining, which is more expensive. This is very simple open pit mining, fantastic metallurgy, really high recoveries. It's largely a copper and gold deposit with a small silver, lead and zinc tail. And the other key takeaway here, if you look closely at that top image, is a lot of the grades at the top. Okay, so we don't have to, it's not a typical steep dipping deposit where it's, your grade increases with depth. This is a fantastic ore body because the grade's at the top. Now, what does that mean for investors? That means this project returns capital very, very quickly. Generates really strong returns through life of mine, and particularly in those first 3 years, and we'll get into the PFS results shortly, it returns capital to pay back debt and returns it to shareholders very, very quickly, which is brilliant. Okay, I said right at the start we deliver. Okay, we're unashamedly younger. We've come from the capital markets. This is my third listed company. Our last one we sold very successfully to a large US-based private equity group, and we're known. We're getting a track record now of being known. We've got a fantastic team based in Queensland for moving things along quickly, and I'll talk to that now. Okay, so I challenge you to find another company that can move things along as quick as we can. Okay, as I said right at the start, we've only been listed 3 years. We've already pushed out 6 resource updates. Not 1, 6. This is something that we're very passionate about. As I said right at the start, we're big shareholders, and we're strongly incentivised to move this along. And it's also important to note that we've done this through the down part of the cycle. And let's be really candid, and I'll talk to this a bit later. It has been quite tough in the small and mid cap copper and gold stocks in the last couple of years, particularly the last 2 years. And what this shows is that we've been able to attract capital at reasonable terms and really progress our business plan even through that tough downward cycle. Now, as you'll see here, that I've sort of alluded to it, there is a lot more growth coming. Okay. At our 2 projects, there are 6 deposits. Now, I'll talk to our PFS results shortly. We've just put out a PFS only a matter of weeks ago, and it's only at one of those 6 deposits. Okay, so the hint here is there's a lot more growth to come. Okay, so we've put out a couple of announcements the last couple of weeks about how we're going to grow this, and it's not subject to circles on a map. Let's go and test this target and that target. These are known deposits that have already been drilled that are going to come into this mine plan. All right, and I'll talk to some of those in a second. So we have growth in absolute spades. Now the PFS, okay, this was quite exciting. All right, so we put this out only a matter of weeks ago, and the results were really fantastic. Typically, you'll see a lot of companies take 2 to 3 years to push out these sort of studies. We did it in 9 months. Okay, we worked weekends, day and night. We've got, as I say, a fantastic team that are big shareholders in the business. We pushed this out as quick as we possibly could. Okay, and as you'll see here, the results were fantastic. I think it's 373 million NPV at slightly less than spot pricing. At NPV8, so not your cheeky NPV5s and 6s that you commonly see out there for those of you who are understand the financial side of things. So this is conservative, and importantly, there's 373 million NPV from only one deposit. And as I said, there are 5 others that we still have to incorporate into this. So this is going to really, really grow and grow quite quickly. The other thing that's important to take away here is that the margins are some of the best out there. Okay, and it's no secret, shallow deposits, fantastic mets, good grade that are near infrastructure. It generates a lot of return. Okay, if you look at that bottoms chart there, what I've done, I've actually put up at the time the copper spot price, and I've actually put our life of mine C1 cost in the below line there. This is right at the bottom of the cost curve. Okay, this generates strong margins, not just in a couple of years, throughout the whole 10.4 year mine life. So fantastic, cornerstone asset. The last takeaway here is that of the 600 odd million that this in free cash this project generates, a lot of that comes in the first 3 years. Okay, now why is that important? That means that this pays back capital in about 1.8 years. So it's very fast payback. So it's not your typical 3 to 4 year payback period before you start returning value to shareholders. This will return value to shareholders really, really quickly and really early in that mine plan, which is a really important thing to consider. Okay, on the ESG side, obviously we're a developer, we're a copper developer. We've got these 6 assets that we're moving down that development curve rapidly, and we knew right from the start that we have to get this through the important permitting and approvals process. Okay, because of that, we've really made a big effort on the ESG side. Not for a lot of the other reasons out there. We want to show the local community, the regulators, all the people that are engaged and part of this, part of this project, part of this company, that we can do this sustainably. So I'm very pleased to say that we're one of only, I think, 3 listed resources companies today, and that's from BHP down, that's certified carbon neutral. Okay, so we've really forward thinking. We're progressing things. We're doing things differently. And so we've got wind on site, we've got solar on site, we've got battery backups, We've got 5 environmental monitoring stations starting to capture data, getting ready for this environmental approvals process that we're about to go down. So we're really leading the charge here and showing that we can develop these assets sustainably. And so we'll have more to say about that in the near future. Okay, I mentioned we've got growth in spades. Okay, and this is where it gets a little exciting. Okay, so basically the next area we're going to go and drill the next deposits at our Devlin Creek project. We announced the other day that we're planning a 10,000 metre up to 10,000 metre RC drilling program, and that'll largely focus on infill and step out drilling at these top 2 deposits, Sulphide City and Scorpion. The great thing here is these deposits are higher grade than our Mount Chalmers mine. Even though Mount Chalmers has got fantastic grade, these are actually higher grade again. So we expect that when we bring these into the mine plan, they will really goose the economics going forward. So Sulphide City and Scorpion will be the next deposits that we'll start to drill. And following that, we've got Woodshaft, which is only 800 metres away from our Mount Chalmers historic mine. And then we've got 2 other deposits called Botos and Mount Warminster, which I haven't got up there, which are also deposits within about 1.5 k's of the existing open pit. So we have upside in spades. Now, I did say there, and I'll just go back, I've just jumped ahead here, but I would really encourage you to go and have a bit of a look at some of the recent announcements around our regional exploration as well, okay? If you look in the bottom corner there, you'll see a prospect called Artillery Road, okay? We've announced, and there's a bit of a hint here, we've announced that we think we've found a new cluster, okay? We don't quite know what it means yet, but there's a cluster of these, what we call EM anomalies, and for those of you who aren't technical, we basically flew a helicopter survey over this whole project, I think it was early last year, and effectively it came up with about 40 of these EM anomalies. Now that basically gives you a really good indication, and I'm not technical either, by the way, it gives you a really good indication that there could be what they call massive sulphides, which is a hallmark of these VMS deposits. So we've got growth here in spades, and what's exciting is there's a really big cluster of these up at what we're calling the Artillery Road new discovery, okay? Now we drilled this last year, we drilled 13 holes and it came up, okay? This is big, I'm telling you, go and have a look at Artillery Road. This is looking really exciting and could really meaningfully, goose the economics of this business. I can see you're about to, the countdown's on, 20 seconds to go. I'll just leave this as a last little hint, and it's more a strategy piece, more a bit of a teaser. But when we did the PFS, there was about $250 million in lost value by selling what they call concentrates to traders. Now I can't say too much, but we are looking at ways to try and recoup some of that value for our shareholders and really goose returns. How am I going? Wrap it up? Done. All right, we'll call it quits there. But look, come and see me at the booth. We missed the last slide, so please come and say hello. My name's Andrew. I'm the chairman of Q Mines. As I say, a relatively new business, and we'd love to say good day and talk you through what we're up to. Thank you.
Thank you, Andrew. I know you want to see that last slide, very important, and talk to him about his defeat at the last game. We can do that. If you've just come in, please come in. There's some seats down the front here. It doesn't look like it, but there are genuinely some seats down here with a nice little table all set up here. Now, this fella here should be a very happy-looking individual. I didn't get the opportunity to introduce him. He's very newly minted with Orpheus, so he's just come on board. He's got his little hammer and his bits and pieces, and he's popped them all into his new office. So he's going to be a big change over at Orpheus. This is Clint Dubineski, correct? Yeah. Did I say it correct? Come on, Clint Dubineski? We all want to say it correct, that is right. So he is Orpheus's brand new Chief Executive Officer, so please make him welcome on that one. And it's interesting, as we were talking earlier this morning about the paradigm shift towards uranium and our opinions as a country towards uranium and using it in this transition to cleaner energy. And I've just been checking online. Did you have a look while we were up here? I haven't had a chance up here. You haven't? So if anyone has been just looking on the side, I know you would have been very dedicated to all our presenters up here, but the Future Coalition Government has just said that it will seek to build nuclear power plants in Gippsland in Victoria, Gladstone here in Queensland, Port Augusta in South Australia, Collie in Western Australia, and the Hunter Valley in New South Wales. So they've come up and they said, we will support having these nuclear power
stations. Yeah.
So that'll be interesting. So they're going to need people like you, but how they're going to get around this ban, on uranium in some states is going to be interesting. I'm sure you'll address that.
Yeah, no, I think it's very exciting times, and really good to see that paradigm shift and coming from South Australia. I'll talk a bit more about it in the presentation, but we've had bipartisan support for the nuclear fuel cycle for quite a period of time, and are really in the forefront. So it's great to see on a national level these conversations coming up, and this really puts us in a great position as Orpheus Uranium. So yeah, thanks for the introduction, and thanks for having me here. As mentioned, I've just started with Orpheus Uranium 4 weeks ago, so first time up on stage, so yeah, really excited about that. For those that don't know, Orpheus Uranium had a rename at the start of the year, had picked up some tenure and now own 100% of that tenure, and refocused the business to become a uranium, or uniquely a uranium exploration company within Australia. So really privileged to come on board, usual. So during this time, as I said, I've been here for 4 weeks, and it's been a really interesting sort of conversation with people. I've come from working 10 years within a private business, Australia's longest in situ recovery uranium producer, and then prior to that, had spent some time over at Honeymoon, and also with a multinational uranium exploration company prior. So for me, coming on board was a big decision, and a lot of people ask me why. And I think when I step back and listening to the team at the front here early on, it's the team and the tenure. So when I have a look at it, we've got a really good board that has technical knowledge within the uranium industry, and also links to the uranium industry, which is not common. As we know, uranium fluctuates, and as we've just discussed, there has been limitations Australia-wide on uranium exploration. So it's a very unique skill set and very unique knowledge that comes into the business or is already established within the business. And similarly, the tenure. When I have a look at this with that previous work at Beverley, 4 Mile in South Australia and Honeymoon, I looked at the tenure that they had, but given I'm a geologist and geological past, and it's some of the best tenure outside of these known deposits that I've seen. So it was really appealing to come on board and be able to work with a group to start to explore in these provinces and really put ourselves in the best position for success. So with that, the company has been strategic in the way that it's actually acquired the tenure. We look at South Australia and Northern Territory as the 2 jurisdictions in Australia that allow uranium mining and exploration. And also, they've set themselves up to be drill ready, subject to the regulatory approvals and the likes, with these major projects within Frome in South Australia, which is a very uraniferous prospect, or a tier 1 world-class sort of province for uranium sedimentary style mineralisation. And also up in the Pine Creek origin of Northern Territory, which again is another world-class, but for unconformity style uranium. So really exciting project areas with really promising government approval, or the ability to actually be able to produce in these, should you find so. With this, we're working towards getting on the ground for the first time. We've got our Frome project, which I'll go into a bit more detail, looking at commencing drilling imminently out there. We've also got Radium Hill South, which again, we're working towards getting the regulatory approvals and looking at getting on the ground. Being an active explorer, we recognise that whilst we can do work with a lot of the historical data in the office, actually generating that interest in the business comes from drilling. So we want to be a dynamic team, and we want to utilise the historic data that's there, but we do want to be out drilling and be active. From there, we've got another couple of projects in South Australia. I'll look at them in a bit more detail in a moment, and Mount Douglas in Northern Territory. So in South Australia, as touched on, we've got the Frome project. So we start to have a look here. For those that have been following the uranium market, and I know that there's a couple of people in the room already having a chat to, we're adjacent to Gould's Dam, which is held by Boss Energy. With these systems, what we actually see is that the mineralisation doesn't necessarily occur as a singular system. When you're actually within those areas, they're really encouraging to start to pick up additional deposits in close proximity, given that you've got those ingredients that you're looking for uranium mineralisation in the source transport trap mechanisms. We extend that to the Radium Hill South project. down here on the bottom. Similarly, in close proximity to existing deposits. So again, that tenure that the company's picked up and developed puts it in at the forefront of being able to explore and discover. And then looking at the more recent granted Woolshed and Munderno project, which similarly is in close proximity to Honeymoon. So for those, again, that have been following the markets with Honeymoon coming online. So the Frome project, this is really exciting. For me, again, one of those projects that came out and had a look at the technical documentation, and it really stood out to me as an opportunity to discover something within these particular areas. When we have a look at this, we're coming out to these project areas and looking at dynamic drill programs. So again, with that technical knowledge that we bring in, we're not just setting up these programs just to be drilled out, come back, drill out. We're looking at that data before we get out there, consolidating that, providing ourselves options, and subsequently, as those programs are happening, we're making decisions throughout the program to actually put ourselves in the best stead to understand these systems and subsequently make discoveries. With this, probably some of the really interesting areas, or something that's really interesting about these areas, is that these mineral systems have already been found. So historic explorers have come out here and put a lot of work and financial investment into these projects. And where we see an advantage for us is that we're starting at a stage that's more brownfields as opposed to greenfields. So we're utilising that historic data and again, putting ourselves into the best opportunity to actually have some discoveries. And geologically, we share similar characteristics to those known deposits within that Frome area. Aruna prospect, we're looking at getting out here imminently. So this is another really encouraging area. Orano, one of the multinational uranium players in the nuclear cycle, held this ground previously. With respect to this, they didn't sterilise the area. We saw that we had the global financial crisis followed up by Fukushima, which meant that they took a step back, but as an advantage for us, what we actually see is that we've got a couple of hundred drill holes out in this area that we can feed back into the models. And again, that mineral system has been found. So we can use that technical knowledge and those increases in both technology and knowledge of these systems that have occurred over the last 10 years to feed back into our exploration activities and really put ourselves in a good position. Radium Hill South, I won't get onto too much detail, but a similar situation where there's 5 known prospects out here. A lot of historical work had been done within this particular area. People had pulled back in that 2014 period as well. Munderno Woolshed, similarly, another area in close proximity to known deposits, and a really good opportunity and reflective of the group. They put a lot of effort into building up this portfolio and even in a competitive tenure got granted some of the lower Woolshed project more recently. So I'll go to the Northern Territory now. Here we're targeting unconformity style mineralisation. So these are the higher grade mineral systems that you see, similar to what we hear about over in Canada, and has been an area of production over time. So we're really excited about getting out here. This probably takes a little bit more time, and we've got that focus on South Australia. Especially in the deposit style in South Australia, but still enthused to get out to Mount Douglas, where we've actually had some anomalous uranium at the surface. So yeah, with our Mount Douglas project, we're excited about this. With regards to the area out here, again, flying radiometric surveys allowing us to see evidence of potential uranium mineralisation at or near surface. So some follow-up work to be done here. Really excited to get out and start to look at these over the next 12 to 18 months on the ground. In terms of our corporate structure, this, again, has been really interesting. What we see this as is an opportunity to get on board early. So I've come on as a technical person into the CEO role. And what we can see here is with Simon Mitchell, one of our non-executive directors. He's been in the uranium industry for quite a period of time. So again, resonating with that focus on building a good team. So really good assets there. I should have touched on Mick. Mick's been with the business quite a period of time, been in the industry quite a while, so providing that really good support as a chairman. Todd Williams, a young fella that's got some really good background in uranium, again, providing that technical input to the team to help us push us along, and Richard as non-executive director and company secretary, who's been really good for the business. In summary, uranium, as we know, the market's grown over the last couple of years, and with that, what we've seen is a small drop back, but what we've got to consider is that long term. At the moment, uranium's around $90 a pound, or US $90 a pound, with an exchange rate of 66 cents. So we're looking at that $130, $140 a pound Australian for uranium. And there's this real long-term outlook that is going to stay at that price. So when you start to look at the projects in South Australia, which are sedimentary style uranium deposits, they're really low-cost outputs, and you build your capex as you start to develop these deposits. So for us, coming in as an explorer, inevitably we want to discover something, and we've put ourselves in the best position to discover something. But if you're fortunate enough to discover something, we've got sustained or predicted sustained a uranium market that's at its performing quite highly, as well as projects that can have low capital cost inputs to actually get up to development. We talked about the technical team, very unique. Once again, we're looking at very unique skill sets that are being brought into the business. So being able to be effective and efficient with our exploration, and subsequently, if we find anything, with production, but really focusing on that exploration side of things. The tenure, again, is situated within first or tier one world-class systems and deposits. With South Australia, I didn't touch on it when we were there, but you see that there's these enriched rocks that surround the basin area, some of the hottest rocks in the world, and they shed into the basin and promote that potential for economic mineralisation. The prospectivity, so again, with that recent investment, we're following up on known mineral systems. We're not just going out and drilling holes for the sake of drilling holes. We're really hitting those targets early on, which provide that best opportunity for good intersects. And drilling, and more notably, looking at drilling commencing imminently. So hoping to get out there quite soon on our major projects. Thank you. Thanks.
I was just going to say to you, you're fine. I stole some of your time earlier talking about the announcement, so I felt bad about pushing you. So I was just
that's all right.
staying on the stage. Is there anything else that you felt that you didn't get through that you really wanted to pass on to everyone?
No, I think that's more than enough. I appreciate the time. And for any further conversation or any technical conversations that people want to have, feel free to come see myself at the booth.
Wonderful.
Thank you.
Thank you so much. Thank you. That was a little bit mean of me, because that was his virgin appearance here at... we need him to come back and do some more. So thank you so much. And interesting that uranium is a hot topic this morning as well. Vanadium is an interesting little commodity. What do you know about vanadium? Know much about vanadium? I know there's about to be a little issue with supply there for that one. Usually we're looking at vanadium in terms of steel, but we need to look at vanadium in terms of energy in the future as well, in particular the vanadium redox flow batteries. So there's a big problem at the moment outweighing current mining for this critical metal. So this fellow here is Julian Woodcock. He is the MD of Viking, and he's going to explain the importance of vanadium and its bright future in the battery energy storage world. Would you please make him very, very welcome?
Thank you, Chrissy, for the introduction, and thank you for the conference organisers for putting on the event. As Chrissy mentioned, I'm going to talk to you about the vanadium sector, and our Canegrass Battery Minerals project is the main asset. Just as a quick overview of the company, Viking Mines, we've got about an 8 or 9 million market cap. 4.4 million cash in the bank at the end of the last quarter, so well funded to continue our activity I'm going to talk through that we're planning on doing. But that leaves us with an EV of under 4 million, and I think I'll show with this project that I'm going to talk you through that EV does not really reflect the value of the asset that we have. So I'm here to demonstrate to you that there's good investment opportunity to get into Viking Mines with the quality of the asset that we've got and the future outlook for vanadium. So the two projects which Viking have, we've touched on the Cane Grass Battery Minerals project. Both our projects are in Western Australia, so a great jurisdiction to be operating within. The vanadium project is located 60 kilometres from the township of Mount Magnet, and we've got sealed roads and gas pipelines very close to the project. In fact, the Australians only have a vanadium operating mine, which is on care and maintenance at the moment, is about 15 kilometres east of us. So we've got process infrastructure nearby, albeit with a neighbour, but that presents opportunities as well. I'll also touch briefly at the end on our First Hit Lithium and Gold project. This is a couple hundred kilometres north of the township of Kalgoorlie, 40 kilometres west of Menzies. This project historically had a gold mine producing 30,000 ounces at 7.5 grams a tonne, but there's also lithium potential with Mount Ida lithium project, which is owned by Delta Lithium, about 60 kilometres to the north of us. So I'll briefly touch on that at the end of the deck. However, firstly, I want to talk about vanadium as per the introduction that was provided. Vanadium globally is about 120,000 tonnes metal is produced, and predominantly this is provided by China with over 60%, subsequently Russia 17%, South Africa 8%, Brazil 5%. So over 90% of global supply is controlled within the BRICS jurisdictions. The outlook for vanadium, historically it's always been within steel, so about 5-6 years ago, well over 95-99% was within the steel sector, hardening steel. However, in around 2020 we started to see a shift. About 1% of vanadium in 2020 went into vanadium redox flow batteries, and I'll talk to the batteries and their benefits in a moment. In 2023 that had increased to about 10 to 12%, and the outlook is that we're going to see a substantial deficit by the end of the decade of around 137,000 tonnes. That essentially means that we're going to see about an increase with the projected increases with steel demand as well of around 2.6% in the amount of vanadium. So we're seeing this happen. The batteries are a significant advantage over lithium ion for long duration energy storage. Their disadvantages are they're large, they're heavy, so they're not for a mobile application. However, in areas where space isn't a premium, they have significant advantages in that they're non-flammable. They can have 100% depth of discharge, which means you can fully discharge, recharge them without any detriment to the battery. They last over 25 to 30 years. And for these reasons, the cost per kilowatt hour remains significantly lower than lithium batteries. Now, they are being deployed. So there's an energy hub in South Australia that's been built. There's a UK company building and producing these and delivering them globally. Synergy, the Western power provider within Western Australia, is doing a trial battery in a remote community to supplement with the fossil fuel generated power they have there. So we're now seeing them start to penetrate market. Some of the largest companies, Sumitomo and LG, are producing these. China is leading the way with the largest battery globally, a 100 megawatt battery that runs for 4 hours. That's a big enough battery to power 100,000 homes. And last year, China announced a suite of companies that are going to build factories to make these batteries. And when you look at the nameplate production of those companies that are going to be in production within a couple of years, they consume all the current vanadium production that there is today on an annual basis. So that demonstrated curve looks like it's starting to occur. So we're starting to see a significant uptake in these batteries. So that's why we're focusing on a vanadium project. We've got our Cane Grass project, which we've been working on for about 18 months or so, and it's been consistently delivering. We went out to this project initially with a 79 million tonne resource. We undertook 7,000 metres of drilling. We doubled that resource to over 150 million tonnes. We improved the grade of the vanadium. The table at the bottom right shows all the contained metals, so it's not just vanadium. We've got iron, titanium, copper, nickel and cobalt within this resource. And the actual in-situ commodity value of those metals within that global resource of 150 million tonnes is about $20 to $25 billion US. We're looking at applying the economic potential parameters to this. So it's not a scoping study. We haven't got sufficient resource confidence yet to be able to declare it as such. However, when we undertook a pit optimization using current commodity prices just for the vanadium and the iron, we defined a series of pits that seemed to be have economic potential that we need to focus on. And they're shown on the right-hand side of the image there, the 3 pits. 3 deposits, but they're interconnected, Kinks South and Foldnose. Within those pits, we've defined 61 million tonnes at about 0.8% vanadium and 35.9% iron. That doubled our strategic objective. We initially set out to have 30 million tonnes within pits. Why 30 million tonnes? That was 1.5 million tonne a year operation for 20 years. So we significantly exceeded that, and that's actually given us strategic optionality. I will add, we did look at the various scenarios of just revenue from vanadium only through to the full suite of commodities I've mentioned, and that saw a range of pits from 31 to over 90 million tonnes, which would give a conceptual mine life of anywhere between 20, 60 years or greater. So this EV is not our EV does not reflect the huge value of this project. I'm going to go to the bottom now, to the Foldnose area. This is the open pit that we believe we want to carry forwards at this stage. So this was the largest part of the resource within the pits. The pit was 1.3 kilometres long, 600 metres wide, 180 metres deep, with a strip ratio of about 3.7. Within this pit, however, is contained 700 million pounds of vanadium and in excess of 20 million tonnes of iron concentrate. That represents more than 25 to 30% of the inherent commodity value within that global resource I talked about on the previous slide. So this really looks like the highest value opportunity. So this is our priority target. We're looking to increase the resource confidence, so it's an inferred resource at the moment. We want to go out and drill this, convert it to indicated. Based on the pit dimensions and the work we've completed so far, that only requires about 3.5, maybe up to a push 4,500 metres of drilling. That's around $500,000, $750,000. It's well funded within our current cash reserves. So this is an area of focus, but I don't want to discount the other projects, the other deposits we have in the area as well, which still show a huge amount of potential. It's just this is our priority to focus on at this time. Now, one of the key things with vanadium is how you extract it. So these deposits are geologically fairly simple. They're magnetite. These are magnetic rocks. I've got some samples at the booth if you want to come and have a look. And they're fairly straightforward geology to define, but how you extract the vanadium is where you need to focus your attention. First part of that is relatively straightforward. Being magnetic, you crush and grind the rock, and then using magnets, you essentially separate the magnetic minerals out and the vanadium goes with it. The images at the bottom there show the steps we've gone through in our test work. We've made the magnetic concentrate, and then the chemistry gets a bit more interesting. So in order to liberate the vanadium and get it out, you have to roast it, so you heat it up to about 1100 degrees C. That's the middle picture there that shows the material after it's been roasted. And then you leach it simply with water. So you add salt into that mix. It turns the vanadium into a vanadium salt, and it's soluble within water. So the fourth image is the vanadium leached out into a liquid. Then you go through a process of refining to produce the pentoxide flake, which is the final saleable product. So we've demonstrated this pathway with our metallurgical consultants on samples from the pits that I showed you. So we're now de-risking that aspect. There are areas that we can seek to add additional value. Firstly, there's the copper, nickel and cobalt that I mentioned earlier. They report to the tail, so they're the non-magnetic aspects of the test work. We're looking at doing test work to concentrate that up, so that test work has commenced. There's also the titanium I mentioned. At this stage, we actually treat it as a penalty because it limits the ability to market. However, we are looking at doing additional separation test work on its magnetic properties that will allow us to produce a titanium concentrate. So again, we've commenced with that work. Finally is improving the purity. So we're moving up to achieving a 99% vanadium pentoxide flake and also producing electrolyte. So that speaks to that battery sector that we see growing significantly over the next 5 years. All of those steps of test work have commenced, and we're now in the process of refining that work, and then on the basis of that, we'll look at commencing with the next round of drilling in the future. I'll talk to the timeline for that shortly. In terms of other vanadium projects in WA, there are a suite of them. The most advanced is Australian Vanadium, so the second column along there. They also have a large resource. Now that company has a market cap of about $130 million at this stage. They've de-risked it, they've undertaken all the feasibility studies, etc. They're looking to move forward to their decision to mine. Now they're 130 kilometres north of us, so they have increased costs in terms of moving their material to port. There are other assets. The Atlantic is the private company which has the previously operating vanadium mine just to the east of us, again with a larger resource, albeit at a lower grade. So our resource looks potentially more favourable in that space. And there's other players in the sector. I put it to the crowd here that our value is a 10 million market cap today, funded with $4 million plus in the bank, can take us through the next stages of activity. The deposit has been delivering on what we've been expecting it to achieve. If we complete all the studies required, we should be trading at comparable market caps as to that of Australian vanadium. Yes, we've got to go through the steps, yes, we've got to do the work, but that's the investment opportunity. How are we going to release value from this project? Well, there's a couple of different scenarios that we consider. Firstly is that we look at just producing a magnetic concentrate. It's a lower capital cost option, and then we could look to sell that concentrate directly, primarily for its iron value with some credits for the vanadium. Potentially a toll treatment or a product sale. I mentioned Australian Vanadium. They've previously announced that they're going to build their refining process closer to the port of Geraldton, and they may be amenable to having agreements in order of buying concentrate material to process through that, or doing a toll treatment. So that's a second option in that space. The other side is that we produce vanadium pentoxide flake, higher capital cost scenario, but we could get the full value. Or, as I mentioned, we've got other infrastructure and assets in the neighbourhood that maybe we'd be able to engage and have a strategic partnership with. In the last few minutes, I just quickly want to talk about our lithium opportunity. So the first HIT project, which is north of Kalgoorlie, the image in the middle there shows our tenure in gold. Around that, we have Delta Lithium to the north. They've got a 12 million tonne lithium resource with about 1.2% lithium. 60 k's north in the same type of rocks. The green tenure is Wesfarmers JV into ground held by Ora Banda, $27 million JV or $26 million JV there. We've got a substantial land holding in this area. Little work had been done for lithium. We undertook an auger program at the end of last year. The image on the right shows the results from that with all the coloured areas, and we defined a whole series of anomalies. So we're in the process. It's early stage activity, but looking at following up with lithium exploration in the area. We saw some large anomalies defined, 2 kilometre by 0.6 kilometre, etc. And they're the areas to focus on going forwards. There's also gold. The image on the right is a long section through the historic gold mine with very high grade results in excess of 1,000 grams per tonne in places on face samples with lots of coarse gold. We undertook some work on this about 18 months ago. We put a pause on the activity, but there's a number of targets warranting follow-up. So a metre at 36 grams, metre at 17 in areas that are open north and south. North of this historic mine, 2 metres at 10. To the south, a metre at nearly 8 grams. So these are all areas we'll be looking at focusing and doing some additional early stage follow-up work on those targets. In terms of fully funded for our pathway going forwards, the Gantt chart here shows all the activity that we're looking undertaking, the metallurgical study that's underway, drilling later this year, probably in the September quarter. Bringing that together with that activity will allow us to have sufficient data to be able to undertake a scoping study or potentially a pre-feasibility study. So this is the activity that we're fully funded to carry through for the remainder of the year. On our lithium and gold project, the lithium anomalies I mentioned, looking at undertaking some mapping and rock chip sampling in those areas, bringing those targets forward, as well as potentially following up on the gold and looking at undertaking some drilling in there. So to wrap it up, investing within Viking Mines gives you exposure to a whole suite of different commodities: vanadium, iron, titanium, copper, nickel and cobalt, with our additional lithium and gold projects. We're not chasing multiple commodities, they just happen to be those commodities within the 2 projects we have. We've got a large mineral resource estimate with proven open pit potential, which is de-risking the project. There's a strong vanadium demand fundamentals that I explained with regards to the future production outlook and that's underway. And I would argue that we're significantly undervalued compared to our peers in the vanadium sector, and we have a whole suite of assets that are not really reflected in our EV. Thank you very much for your time.
Thanks, John. Do you spend much time in Menzies at all when you go through for the mining process?
I have been to Menzies a number of times.
Yeah, it's fascinating, isn't it? Have you been into Hoover House at all?
That's a bit further north, but yes, I have been there as well.
Yeah, when you invest in Viking, you can go up via Menzies. You can go. They've got a big open pit there at a place called Gwalia.
Yeah.
And Herbert Hoover, who was the 31st president of America, he was the mine manager there, so they built a house for him there. He never actually lived in it, but he did go back and hold a ball there.
No, he did live there, and he built a swimming pool.
Technically, he didn't live there. Let's have a debate on that one. No, but it's great now because it's a B&B. You can go and they've got a little ghost that hangs out there. You can go and stay. Which is really neat. But I brought that up so I can segue to the next mob. Would you please give Julian a big round of applause?
Thank you very much.
So you've got the 31st president there. So the question on everyone's lips at the moment in America and for us is who will be president number 47? Is it 47 we're waiting for now? No. What are we up to now? President number 47? Quick, someone help me out here. It is the 47th president. Yeah? Trump or Biden. So this fella here reckons who?
Oh, look, I'm not a political commentator.
No.
I'm quite happy whoever is elected.
Yeah.
I guess Trump is a lot more pro-business than Biden.
So this is Michael Haynes, everyone. He is the MD and CEO of New World Metals. And I was thinking the only reason you'd really care is if it's going to affect your 17 high-grade targets in your nice big high-grade copper drilling project. Would that be right?
Well, look, even Biden sees copper as a critical metal.
Yeah.
Copper is our focus.
Right.
Biden is pro-development of critical metals, including copper.
Right.
I think Trump will be even more pro-development. So
Right.
so we're happy.
Well, he's just got back from America 2 weeks ago. He's going in another 2 weeks. Take us to Arizona and convince us to be part of your project. Please make him welcome, everyone.
Thanks, Chrissy, and thanks for everyone for attending here today. Our project is the Antler Copper Project. It's an extremely high-grade copper project, one of the highest-grade copper projects in the world, and it's located in a fantastic jurisdiction up in northern Arizona. It is a sparsely populated area of Arizona, but it is very well serviced with infrastructure, all of which bodes very, very well for developing a mine. And indeed, we see that we are going to be one of the world's next copper producers. In terms of infrastructure, we are focused on an old mining site. And so around that site, there is a road that leads directly to the old headframe. There is grid power to within 700 metres of that headframe. Fortuitously, just 15 kilometres away, there's an interstate highway, and 15 kilometres away, there's a transcontinental rail line, and just 50 kilometres away, there is a town of 30,000 people. All of this is really, really supportive for developing a low capex, low opex mining operation. In terms of the company, we've been focused on the Antler Copper Project since March 2020, so just on 4 years now. We acquired the rights to 100% of the project back then, and we commenced a drilling program. There is old mining there, and that simply by drilling underneath the old workings there, we've brought the company to a position where we have submitted applications for mine permit approvals, and we are within weeks of finishing a pre-feasibility study. We are taking the Antler project to production, but equally, while we do so, we are going to continue to grow the resource base. We've got the team to build this. Myself, I'm a geologist and geophysicist. Our chairman is a geologist and a lawyer, intimately involved in project finance. Our COO is a mining engineer. His most recent job was as CEO of PYBAR, an underground mining services business employing 2,000 people. We are going to be building an underground mine. So Nick Woolrich is very, very capable of leading that process. And indeed, our non-exec director, Tony Polglaze, is a metallurgist and electrical engineer, and he too is a mine builder. He spent his career building mines. We're very well financed to build this mine. We've got a market cap of only $90 million, and we've got just on $20 million cash at bank. So we're very, very well financed to build this. And this project is extremely financially robust. And so, like many of us in this conference, then I too believe that we are firmly undervalued. We have two clear corporate objectives. The key driver for us is to get Antler back into production as quickly as we practically can. The reason we're doing that is because Antler is an extremely high-grade deposit. We were attracted to it 4 years ago because of the very high grades. There is a modest amount of past production from Antler, only 70,000 tonnes. But that 70,000 tonnes was grading 3% copper and 6% zinc. It is a VMS deposit, polymetallic deposit, and we will be recovering value from 5 metals. We will recover value from copper, lead, zinc, gold and silver in 3 separate concentrates. Now, these VMS deposits typically occur in clusters. And where there's 1, there's often 2, and where there's 2, there's often 3. Indeed, we're in a district where we know there's 8 past producing VMS deposits. And New World now owns 3 of them. and we see opportunity to expand our resource base at Antler and at surrounding targets within a trucking distance of the processing facility that we intend building at Antler. So our second goal is to continue to expand the resource base. To date, or to January this year, we had only drilled over 700 metres of strike just at the Antler deposit alone. And that was purely because we were having consistent, phenomenal exploration success as we drilled deeper and deeper at Antler. Just before I get into the technicalities, in terms of our location, our team flies in and out of Las Vegas, which is in Nevada, southern Nevada. And we base our operations an hour and a half set to the south of Las Vegas in the town of Kingman. 30,000 people in the town of Kingman. Kingman's about 3 hours north of Phoenix, which is the capital of Arizona, and our project sits about 45 kilometres south of Kingman, down an interstate highway. Arizona itself is the source of 70% of the copper that is produced in the US. It is a very pro-mining jurisdiction. Northern Arizona is even more pro-mining. Just 50 kilometres to the west of us, the most recent mine that was permitted in the in Arizona, is the Moss Mine, sitting 50 kilometres to the west of us. That is an open pit heap leach gold mine on federal land using cyanide on federal land, and that was permitted 4 years ago in 2020, over 18 months. This is a pro-mining jurisdiction. We're in much better position than that. We're on privately owned land, and we are seeking to develop an underground mine only, minimising surface impact, minimising environmental impact, minimising social impact. Very low impact operation. In terms of what we've done over the last 4 years, we've simply been drilling deeper and deeper and deeper underneath the historic workings where there was 70,000 tonnes mined previously. So this is a long section that illustrates in the top left area is the grey areas, which is the 70,000 tonnes of ore that was stoped previously. It's a VMS deposit, and in this case, we are either in high-grade mineralisation or we're in barren host rock. It is unusual for a copper deposit to be that way, but we typically, we are in an unusual circumstance where it's an extremely high-grade mineralisation. And so really what this diagram illustrates is the variability, the thickness of that high-grade mineralisation, with the red and magenta zones on this being extremely thick, averaging in excess of typically 15 to 20 metres thickness. But even the yellow and the greens and the oranges on this slide are very, very mineable thicknesses. What we've seen as we've drilled deeper and deeper is mineralisation is continuous from surface, it's laterally continuous, and it's continuously high grade. And you can see some of the results that we've returned as we've drilled deeper and deeper. 42 metres at 3.8, this is copper equivalent, 10 metres at 6, 18 at 3.5, deepest hole on the project, 21.5 metres at 5.5% copper equivalent. That's 850 metres below surface, continuous from surface. This is very, very mineable. Just over a year ago, we declared a second resource on this, following our exploration drilling. We've taken a 1% copper equivalent cut-off. Now, we will realise value from the copper, the zinc, the lead, the silver and the gold. But if we integrate all that and we simplify it into a copper equivalent grade, then at a 1% copper equivalent, which is about our economic cut-off for underground mining, then we have 11.5 million tonnes at 4.1% copper equivalent. We've heard numerous commentators this morning talking about high-grade copper mines, 1.2%. Our resource base is 4.1% copper equivalent on a metallurgically recovered basis. If we took 100% of the metals in that equation, then this resource would report as 4.6% copper equivalent. So it is a very, very high-grade resource. 79% of that resource is classified as indicated, so high confidence level. What's more, if we take a 2% copper equivalent cut-off, and so if we dismiss all mineralisation lower grade than 2% copper equivalent, let's call that notionally lesser value than $170 a tonne, we still have 95% of our resource base. We still have 10 million tonnes at 4.5% copper equivalent on a metallurgically recovered basis. And this is why we are developing this project. It is an extremely valuable resource, it is an extremely robust resource, and it affords very high margins. So we've taken that resource, we've done a mining study. In fact, we've now almost completed a pre-feasibility study. So we've done 2 mining studies, almost completed a 3rd mining study. We are looking to develop this in the most responsible manner practicable. Underground mining only, using dry stack tailings, returning half of the tailings back underground as paste fill. This is going to be a very, very low impact development proposition, all on privately owned land, which streamlines permitting. We already have a 13-year mine life. Mineralisation is open at depth. Deepest hole in the project, 21.5 metres at 5.5% copper equivalent. But we already have a 13-year mine life. So we have submitted an application to start mining this because we can develop this project for very modest capex, $250 million capex. Now that estimate is a little bit stale. Capex in the pre-fees will go up slightly, but it is still very, very manageable capex for a junior. We're not looking at a long lead time billion-dollar capital development proposition. We can manage $200, $300 million capex as a junior. What's more, we can build that very, very quickly. So we anticipate bringing this into production in several years' time. The reason we're doing that is even at our study metrics, where we used $8,500 a tonne copper. Now, today, copper price is $9,500 a tonne, 12% higher. But on the study metrics, then the project generates $3 billion of revenue, US, 4.5 billion Aussie dollars of revenue, and half of that, after pre-production capital and all sustaining capital, is free cash. So we generate $1.5 billion US dollars of free cash over the duration of that initial 13-year mine life. Very robust NPV, 835 million US dollars pre-tax, and very, very good IRR. On an annual basis, that project, as it stands, makes 150 million US dollars free cash. That's essentially EBITDA, free cash every year when we're producing at 1.2, 1.3 million tonnes per annum. 200 million Aussie dollars. At spot prices, it makes 300 million Aussie dollars. This is for a company that's got a $90 million market cap, $20 million cash in the bank, 70 million EV. So this is high grade, this is high margin, it's modest capex, faster production. So we're building this. We've submitted our longest lead time mine permit application. We're within weeks of completing a pre-fee study. We've essentially already started work on the DFS, and we will be submitting additional mine permit applications. But to date, we've only drilled over 700 metres of strike. This is a deposit in a cluster of at least 8 known past producing VMS deposits. We now own 3 of those past producing deposits. We own the Antler deposit, 75 kilometres away. We also own the Red Cloud deposit, where there was past production, very modest, only 200 tonnes, but extremely high grade past production of 6.5% copper and 3% zinc. There's only ever been 3 holes drilled underneath that. And just 3 weeks ago, we announced the acquisition of the Pinafore deposit. Pinafore deposit is our immediate highest priority target. It affords the opportunity to develop a satellite deposit where the ore is so valuable that we could readily truck that to the processing plant that we are going to be developing at Antler. Pinafore is also located on privately owned land, which helps expedite mine permitting. So at Pinafore, there is past production of only modest 9,000 tonnes of past production, but very high grades, 5% copper, 11% zinc. But there were 9 holes drilled at the Pinafore deposit subsequent to that past production. 7 of those 9 holes intersected high-grade mineralisation. We can see some of the results here, 4.5 metres at 3.7 copper and 10 zinc. Ore of this nature is worth 400, 500 US dollars a tonne. We can readily truck ore of that nature to the Antler processing plant at a cost of $10, $15 a tonne and either expand our production profile and or extend our mine life at Antler. Now, there's a historic resource at Pinafore of 600,000 tonnes at 3.5 copper and 7 zinc. That resource is open along strike in both directions, and it's open at depth, just like Antler was when we started drilling at Antler. There's 1,200 metres of alteration surrounding the Pinafore deposit. Only 9 holes have ever been drilled to test that, over 1,200 metres of strike. We now have a rig operating at Pinafore. In addition, we also have 2 rigs working on exploration elsewhere. 5 kilometres to the north of Pinafore, we have defined an extensive system 4.5 kilometres along of surface geochemistry anomalism, extensive 1.2 by 1 kilometre long IP anomaly. Red Cloud deposit sits adjacent to that IP anomaly. We're yet to run IP over the Red Cloud deposit. 900 metres to the north of Red Cloud is the Rudkins massive sulphide prospect. So extensive mineralisation over 4.5 kilometres here. We're drilling at the Javelin district. We've also got 2 rigs working at Antler. We've got extensive, wide-spaced geochemistry anomalies that extend between Antler and 6 kilometres away, the other past producing deposit, Copper World. None of these geochemistry targets have been tested. We've defined 11 high priority targets here. They've got coincident IP anomalies, and many of them have coincident mag anomalies, just as the mineralisation at Antler has. So from here, what are we doing? We're firmly focused on getting Antler into production. We've got a pre-feas that will be completed in several weeks. We will progressively submit additional mine permit applications through the remainder of 2024. We will progressively have mine permits approved through 2025, looking to construct in 2026 and be in production in 2027. Now, while we do that, we have 17 high priority exploration targets. We have 3 rigs working right now on exploration and reserve definition drilling. We'll have drill assay results throughout 2024. Thank you.
Thank you so much. I did sneak an extra minute back on the clock for you, so don't think I was being naughty, but I thought, put that in. All right, we're rounding out our first session mode team, a company that offers you immediate exposure to gold and copper, Kingston Resources, also New South Wales' newest gold producers. They've got a big smile on their face because they fired their second blast yesterday. Everyone got home safely, and they are on track to double their production in the financial year 25. So they've got 18 months of open pit mining, then they're moving into longer term underground, and there's the little bonus discussion around 4 million ounces over in PNG as well. Would you please make this wonderful gentleman very welcome, everyone?
Thank you, everyone, and I appreciate I'm between you guys a coffee and some cake, so I'll try and keep you entertained, and then we can all have a nice break. So, yes, I'm a mining engineer from WA, and we have been reprocessing tailings. So that, for a mining engineer, has been like pulling teeth because I don't get to blow things up. In the last 2 weeks, last week we fired our first blast. You can see it drilled out there. And yesterday we fired our second blast. Last night we did our first night shift in the open pit, so we've just been doing day shift. So watch this space as we ramp this up. So our strategy with Mineral Hill's been quite simple. When we picked this project up in early 22, we had 2 years of mine life, which was reprocessing tailings. We finished reprocessing, sold $99 million worth of gold out of the tailings, produced $25 million of operating cash flow, which has all gone back into the project. We now have a 5-year mine life, and that's going to be extended with our next update, and we are doubling production in financial year 25. So we're pretty happy with how it's gone. It's not easy, it's hard work, but we've got the team and we're delivering. We are refurbishing a processing plant that was built in 1988 for $12.5 million, and I couldn't be prouder of what the team's delivered on that. So we'll talk to you about that. And in 18 months' time, we will be gold, silver, copper, lead and zinc. So we will be producing 3 concentrates from Mineral Hill and Doré. So that's an exciting thing. We're going to talk about Messima. We have a 4 million ounce resource at Messima, a 1.9 million ounce reserve, a 20-year mine life. It's a big project. It produced 4 million ounces with Placer Dome, and we are looking for a partner to help develop that because it's a bit too big for Kingston at this point. We just completed a $13.5 million cap raising, and we're trading above the cap raising price, so it's a good time for everybody to be looking at Kingston. So we're a $56 million company. We've got just $10 million in the bank plus another $7 million of cash backing our environmental bond, and we do have $10 million of debt. In 18 months' time, I want to be in a position where we can choose to pay back our debt early, and I want to have a material amount of cash in our bank, and I'm going to talk to you about how we're going to do that. 4 very supportive shareholders, Delphi, Quintana, Winchester and Farjoy, all supported us during this last funding round, and 3 of those big shareholders have been with us since 2017 when we purchased Missima. It's been a hard market, you've heard everybody say it, but there is a sense things are changing out there. We are getting a lot more interest. So where do we sit? We sit in Cobar South, we call it. We're sitting down here. So these little coloured plants are really important because there's only 2 plants in Cobar that can produce copper, lead, zinc, silver and gold, and that's Mineral Hill and Peak. The other plants that are operating are either single concentrate without doré, and then the other 3 plants are all turned off. So there is a lot of infrastructure, and there's a lot of people talking about producing in Cobar. There's actually not that many that are producing in Cobar, and we're very proud that we are doing that. You can see our growth, financial year 24, that was just tailings. 25, 26, we double, and then 27 is another step up again as the underground ramps up. So we're pretty excited about where we're going. And like Mike earlier, we're a polymetallic project, so we will always be producing copper, lead, zinc, silver and gold. Our board and management, look, 2 mining engineers, 1 geologist and 1 finance guy. We've all been together since 2016 when we've been building Kingston. Mick Wilkes is a mining engineer who was built 4 gold mines, was the managing director of Oceana Gold. Awesome for me. I've got a mentor on the board who has built mines and I can go to and talk to. I've operated them, but I've not built them, and there is a big difference. Tony Wiebe was the chairman of Aurelia when they built Hera, so he's got a lot of Cobar experience, and Stuart Reckner is actually also executive chair of a small company called SER, which is in Cobar. There's a little open pit that was part mined in 2016. We're going to do a cutback on that. That's called Pierce South. You can see in the background there the processing plant, just. There's our waste dumps, there's our tailings dam, the underground sits over there. That is it, that is the site. And that's really important because bonding, environmental bonding is a big issue for the industry, and that's why ours is at 7.4 million and we're able to cash back that. A lot of people in New South Wales and Queensland have debt on their bonding, ours is cash backed. And we work very hard to keep that number at 7.4, despite the regulators trying to push that up every year. So this is the exciting phase. We have finished the tailings. Big tick for the team, well done. Now we're in this second phase of expansion, doubling production. You can see what happens with our grade. Now I talk about paid metal grades, so post recoveries and post payment to your off-takers, to your contractors. So we're a 3% paid underground copper equivalent mine in the future. This first year is all open pit production, then the underground kicks in. So you can see we're tripling our grade, or more than tripling our grade at a lower throughput. So we're going to be reprocessing here, and that's what our CIL can do. This is our organic growth opportunity. We can double our plant capacity because we're approved for 700,000 tonnes per annum. We've got a cyanide licence, and we've got the people. And they're really, really critical pieces of information that everyone needs to have. So, not only do we have a processing plant which we're turning back on and fully refurbishing for $12.5 million, we have 2 declines, 2 portals. There's probably $30 to $40 million of capital development in these undergrounds. We've already pumped one out. That's where we're going to start in the underground. We've bolted and meshed it, and we do everything ourselves. There's nothing worse than a reformed smoker. There's nothing worse than a reformed contractor. I started as a contractor. We are owner mining. There's nothing worse than giving margin away from what our shareholders should be getting to contractors. And that's all the difference is, because you still take the same risk as a contractor or owner miner. So we're very, very focused on that. We have over 100 people now, and they all work for us. So That's me standing there in the middle, our General Manager, Jeff Merrill, and one of our largest shareholders sent out a geologist to have a look. We took him underground very recently. So we've got a lot of engagement from our shareholders and a lot of support, but a strong support base for our growth strategy. We've grown the resource base already by 60% since we've picked up Mineral Hill. It is going to be updated as we speak and coming out next quarter, and that will also deliver an increase in the mine life. So we're going to talk to you about that with more facts soon. So a little bit more about where we sit. So we are here. These are our mining licenses. That's a little tiny footprint of about 2 k's by 2 k's. There's 21 MLs in there. The first one was granted in 1951. So Mineral Hill has a long history of production. It operated for 15 years under Triarco from 88 to 2004. It had a checkered history from 2004 up to really to 2016, and we're here reviving this project. We see a long mine life here, and I'll talk to you about what we see there. We've got a series of our own targets in our first EL. Our neighbours, Talisman, have a discovery 11 k's to our south called Durnings. We're very excited about what they're doing there. The core that we see that they're drilling is very, very similar to what we see at Mineral Hill. And we've got the people. I said earlier when I was on the panel that Kingston is nothing without our team. I can't deliver this. These guys on site are the ones that have really kicked us along and will deliver the next phase of our growth strategy. So Jeff, our GM, standing there, unfortunately he doesn't like photos, so I only easily get the back of him. But he's done a great job in recruiting. He's gone from 4 people on site on care and maintenance to over 100 in the last 2.5 years. We're refurbishing a plant from 1988. You can expect that the Australian standards have changed. We've had to rewire the whole plant. We've had to put a whole new electrical system. There was no fire suppression systems. Everything was rusted. We've fixed it all, replaced everything we needed for $12.5 million because we've done it ourselves. We haven't used consultants. We haven't used contractors. We bring in labour for when we can't do it ourselves, but we basically project manage this 100% by Kingston. I better hurry up. So, tailings is finished. Well done, team. We are now open pit mining. In 3 weeks from finish the tailings, we did our first blast in the open pit. We're now producing plenty of waste and starting to build ore on the ROM. We will be feeding oxide ore through the refurbished plant in July. We're very, very focused on that timeline. So the open pits here are only shown to be 12 months of mine life. That is going to extend. We're going to be drilling in the underground from November, and we are going to extend the underground mine life. We already talked to 5 years of mine life. I'm very confident we're going to be starting to talk to you guys about a 7-year mine life, and then this time next year, I'm hoping to talk to you about a 10-year mine life at Mineral Hill. That's what we're targeting. Remembering we had 2 years at the start. So this is our open pit resource. This is what we're mining for the next 18 months. You can see the grades and why this thing makes really serious cash. So it's 3.5 gram ore body plus a big chunk of silver. This is what is going to put Kingston on that growth projection, because we're going to have a really strong balance sheet from these open pits and setting this business up. We rent the fleet, so we haven't bought a fleet for 18 months' time, but everyone in this gear is working for Kingston. Again, there's nothing worse than a reformed contractor, sorry. So this is the second part of our growth strategy. These declines are already in place. None of this development you can see is a design, it's actual. So if you were to put these 2 declines in, you'd be looking to $30 or $40 million of investment in today's dollars. This is the first underground for us. The Southern Ore Zone, 3.8 million tonnes. We're working on a new mine plan for that as we speak. This is going to be our second underground over here at Jack's Hut, because it's already got a 1.6 million tonne resource and we haven't even drilled that yet, so that's all to come. We have 6 known ore bodies that have been mined from underground already, and we're only starting with the first one here at Southern Ore Zone. We've got the Eastern Ore Zone, which we've got some holes in. We've got 3 metres at 25 grams per tonne, all to be followed up. We've got Ashes Graben, which was mined a long time ago, still open at depth. We've got Parker's Hill, we've got Red Terror, GD140. All of these things do not have resources yet, so we'll get to them in due course as we keep building this mine life. The most exciting thing in the last year for us was this intersection. 12.5 metres at 3.4% recovered copper equivalent underground. That's the first new ore body at Mineral Hill in 20 to 30 years. It's fantastic. It's in the footwall of the Southern Ore Zone. We're very confident it's going to keep growing. This is what the project looks like from the surface. It's very small footprint. Number 1, 2, 3, 4 and 5 are our priority drill targets. So continue to drill underground to extend the underground. I'm looking for another one of these little open pits because I would love a third one. We've already got the 2 here. That's where we're mining right now. Ashes Graben is a potential another underground which sits there. Parkers Hill, potential another underground which sits there. And Bogon is actually our first bit of exploration that we're going to do when we have positive cash flow from the pits. That's just outside our mining ML, but it's really an exciting target for our geos, and that's where they want to start drilling. So I talked about Talisman earlier, and I am going to point out they are also drilling here at Rip and Tear, and they're drilling here at Durnings. This structure through here is really important. This is the Mineral Hill Rift. We are mining Mineral Hill. They're drilling down here and up here. We've got 40 line kilometres of lead soil anomalies between us and their current drilling targets. So that's where we're going to get to once we've finished exploring within our current EL around the mining licences, and then that's the next phase of our growth strategy. Quickly on Messama, it's an amazing project. The PNG government has been difficult to deal with in the last few years. My view is that is changing. This project's going to advance. We want to bring a JV partner in. It's already 4 million ounces, and this was done at $1,000 lower gold price. So you can see where this is heading. This is a big, big project. 20-year mine life, 15 years in reserves already. We are in the process of looking for partners. It hasn't been easy because gold, for believe it or not, 21, 22, no one wanted to talk about big gold projects. Now they do. And the PNG government is settling down and starting to approve projects again. So watch the space on this, and why we're so excited about it. This is when it closed. So between 88 and 04, it produced 4 million ounces of gold. This is when we purchased it, and this is where we are today. So you can see why Messama works. We are just basically doing a cutback on what Placid Dome produced from for 15 years. Look, we've got 3 priorities. I'm not even going to go through this slide. Cash flow from these open pits, extend the mine life with the underground, and do a deal on Messama. And all of those things will provide material value to shareholders. Thank you.
Andrew Corbett, the reformed contractor, taking us out with something to think about. Thank you very much, sir. Thank you to all of our presenters. Thank you again. All right. Tim, we're going to give you a little break. You'll hear the bell. You know the drill. I would advise you to come back for the first speech. It's one of Wilson's advisory team. And again, it was another little podcast that I listened to this morning, and I know that you'll find it really instructional. So please come on back, and you can bring your cups of tea and your food in with you. Don't mind that at all.